Are you curious about the financial health of Ally Bank? Wondering if it's safe to entrust your hard-earned money to this online banking giant? Let's dive into the details and uncover the truth about Ally Bank's debt. Ally Bank, once known as GMAC Bank, has grown into a prominent online bank. Its minimalist approach, high-interest savings accounts, and competitive rates have attracted a loyal customer base. But, like any financial institution, Ally Bank's financial health is a crucial factor to consider. Today, we're going to explore the question, how much debt does Ally Bank have? Understanding debt in banking. Before we delve into Ally Bank's specific debt, it's essential to understand how debt works in the banking industry. Banks, including online ones like Ally, are heavily regulated financial institutions. They use a variety of debt instruments, such as bonds and commercial paper, to fund their operations and lend money to customers. Debt isn't inherently bad for banks. In fact, it's a common and necessary tool to manage liquidity and growth. However, excessive debt can pose risks to a bank's stability, especially during economic downturns. Ally Bank's financial health. To assess Ally Bank's debt, we'll look at its financial statements, specifically its balance sheet. The balance sheet provides a snapshot of a company's financial health at a particular point in time. It outlines the bank's assets, liabilities, and shareholder equity. While Ally Bank does have debt, it's important to consider it in relation to its assets. A healthy bank will have a solid asset base to cover its liabilities. Ally Bank's strong financial performance and conservative lending practices have contributed to its ability to manage its debt effectively. Key factors to consider. When evaluating a bank's financial health, several key factors come into play. Capital adequacy. Banks are required to maintain a certain level of capital to absorb potential losses. Ally Bank has consistently met or exceeded regulatory capital requirements. Asset quality. The quality of a bank's assets, such as loans, is crucial. Ally Bank has a strong track record of managing credit risk. Liquidity. A bank's ability to meet its short-term obligations is vital. Ally Bank maintains a healthy level of liquidity. Earnings. Strong earnings enable banks to build capital, repay debt, and weather economic storms. Ally Bank has consistently reported solid earnings. Regulatory oversight. Ally Bank, like all banks in the United States, is subject to rigorous regulation by the Federal Deposit Insurance Corporation, FDIC. The FDIC insures deposits up to $250,000 per depositor, per bank, per ownership category. This means that your deposits with Ally Bank are federally insured, providing an additional layer of protection. While Ally Bank does have debt, it's important to view it in context. The bank's strong financial position, coupled with regulatory oversight, suggests that it can effectively manage its debt and continue to serve its customers. When deciding where to bank, it's always wise to do your research and consider factors like interest rates, fees, and customer service. Ally Bank has consistently ranked well in customer satisfaction surveys and offers competitive rates on various banking products. With that said, thanks for watching, and until next time.